Hello, welcome to this online lecture where we're going to look at my PQ magazine article on control accounts. I hope you're very well. My name is Gareth. I'm Managing Director with First Intuition, one of the UK's premier accountancy training colleges. You're more than welcome to get in touch with me if you've got any questions. My email address is garethjohn@fi.co.uk. I also use Twitter a lot. You can follow me at AAT Top Tutor, and I post a lot of relevant blogs and links to resources that you might find useful for your studies. Now, First Intuition, we've been very proud in recent years. We were winners of UK Accountancy College of the Year in 2010, 2012, and actually again in 2014. 3 times in 5 years, which we've been very pleased with. I was personally extremely proud to be awarded UK Accountancy Lecturer of the Year in 2011, and in 2013 we were nominated for Study Resource of the Year. Well, in this online lecture we're going to be looking at control accounts, and in particular we're going to be looking at a little example of completing a purchases ledger control account. Now let's remind ourselves of some basics here. So when we talk about a control accounts mean total. So the purchases ledger control account is going to look at the total balance that we owe to our credit suppliers. Now if you remember, the subsidiary purchases ledger will then break that down by individual supplier account. So on the purchases ledger, we show individual balances owed to each credit supplier broken down, so there could be hundreds upon hundreds of individual supplier balances on the purchases ledger. But the purchases ledger control account pulls that all together as a single total, the single amount that we owe to all of our credit suppliers, and that's the figure that would then feature in our accounts. Now when we're dealing with control accounts, you've got 3 major control accounts you may see in your studies. You've got the sales ledger control account, which is looking at amounts owed by credit customers, so that's an asset of the business. We've got the purchases ledger control account, which we're going to be looking at here, this amount that we owe to our suppliers. That's therefore a liability of the business. You might also see the VAT control account, which looks at the position with HMRC, with Revenue and Customs, in terms of whether we owe them money or whether they owe us money. So 3 different control accounts you might see. We're going to be looking at the purchases ledger control account. Well, as we've already mentioned, the purchases ledger control account is a liability of the business. This is what we owe to our credit suppliers. As a general rule of thumb, we would therefore expect it to be a credit balance. Credits are how we show liabilities. If it was the sales ledger control account, that would be an asset of the business, so we would expect it to be a debit balance. But on the purchases ledger control account, we're basically expecting it to be a credit balance, so therefore any increases to the liability, any increases to what we owe our suppliers, we will credit the purchase ledger control account. Any decreases to what we owe our suppliers, any decreases to the liability, will need to be a debit entry. So when you're dealing with control accounts, just start by being very careful about whether it's an asset or a liability, and therefore how you're going to increase and decrease it. So this is a liability. Well, we're told that the balance on the purchase ledger control account brought forward at the start of January was £56,780. That's the amount that we owed our suppliers at the beginning of the month, sometimes called the opening balance, or the balance brought forward. Now, during January, we've got a variety of transactions. We've got payments made to credit suppliers of £34,586. Now, if I pay my suppliers, that's going to reduce the amount that I owe them. We've made some credit purchases of £42,745. Well, if we make credit purchases, that's going to increase what we owe them. We've made some purchases returns, £4,385 worth. Now, if we return goods to our suppliers, that will reduce what we owe them. If we make returns, we're certainly not going to want to pay for it. And we've had some discounts received from credit suppliers. Well, discounts received is where those suppliers are letting us off with part of what we owe them. So that will reduce what we owe. That will reduce the liability. So we're looking at what the balance on the purchase ledger control account carried forward at the end of January will be, or what's sometimes called the closing balance. Well, what I would be inclined to do here is to actually use a ledger account or a T account to show the entries. So we're going to show a ledger account here for the purchase ledger control account. Now I'm only going to be interested in the entries to the control account, although I'll talk about where the other sides of each double entry would go. And remember, the purchase ledger control account is a liability of the business. This is an amount owed to our suppliers, so we're generally expecting it to be a credit balance. Remember, the sales ledger control account is an asset, so we'd expect it to be a debit balance. So if we start almost ticking off the figures one by one, so let's start with the balance brought forward at the beginning of January. Well, the balance brought forward, or the opening balance, because it's a liability, will feature on the credit side. So we've got the balance brought down of 56,780. That's what we already owed suppliers from the end of the previous month, from the end of December, so therefore brought forward to January. So we've dealt with that figure as a credit entry. We've then made some payments to credit suppliers. Well, payments to credit suppliers will reduce the amount we owe them. So I'll show it on the debit side. Now the other side of the double entry for this is probably going to go to the bank ledger account. So if I show a debit on the purchase ledger control account for the 34,586, the credit side of that will go in the bank ledger account, because the credit side will be reducing the amount we've got in the bank account. So we've dealt with that figure. We've then made some credit purchases. Well, this increases what I owe my suppliers. So it will be a credit on the purchase ledger control account. This is increasing the liability. The other side of that double entry will be a debit to purchases. That debit to purchases showing the expense that the business has suffered. But although we've made some credit purchases which increases the liability, we've made some returns which will reduce the liability. So now we're going to have a debit to the purchase ledger control account for the £4,385. The other side of that would be a credit to a purchases returns ledger account, and that credit in the purchases returns ledger account will ultimately reduce the net purchases figure. You can imagine that's actually reducing the expense the business has suffered, because we've actually sent back some of the purchases. And we've also got discounts received. Now, discounts received will further reduce the amount we owe our suppliers, so another debit entry for 2,384. The other side of that would be a credit to a discounts received ledger account. And that credit to discounts received is effectively a form of income of the business. That income is reducing again the amount that we're effectively suffering for our purchases. So, tick, 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 tick. Key here is just make sure you've entered all of the figures where they are relevant. And to work at the balance carried forward at the end of January, we just need to now balance off the purchase ledger control account. And we balance it off in the usual way. Well, if we look at the two sides of the T account, in total on the debit side, I reckon I've got £41,355. If you add up those three numbers, so 41,355. You can see on the credit side you've got way more than 41,355. If you add those two numbers up, you get 99,525. So in the usual way, put the higher of the two totals on both sides, and then work out what the balancing figure will need to be. Now, the balancing figure will need to be on the debit side here, because the debits were far lower than the credits. And if I take the 99,525, deduct the 41,355 I've already got on the debit side, I think I need a balancing figure of £58,170, and that will be the balance carried forward or balance carried down at the end of January, or the closing balance. And one thing to be a bit careful about is, although that balancing figure is on the debit side, it's on the debit side because the credits were initially bigger. So that effectively means it's a net credit balance. So when it actually gets carried down to the beginning of the following month, so at the beginning of February, the balance which would be brought forward at the beginning of February will come down on the credit side because it's a liability. That's the amount we owe our suppliers at the end of January, which we'll presumably still owe them at the beginning of February. So, that's how to deal with the control account. That's the purchaser's ledger control account. Just a matter of being very careful about which side you put each of the entries. Are they increasing the liability, in which case they go on the credit side, or are they decreasing the liability, in which case they go on the debit side? Well, I hope you found that useful. Like I said, do stay in touch. Please follow me on Twitter or drop me an email. Otherwise, maybe I'll see you next time.